Well, hello, I'm Jeff Baumgartner, a senior editor at Light Reading and your host for this episode of Signal Strength, a podcast from Light Reading focused on all things broadband, video, and streaming, and where we break down some of the headlines on the technologies and policies that are driving them all forward. And in this episode, Vikash Harlalka with New Street Research joins the podcast to discuss the cable industry's recent fourth quarter results that just got in the books, and talk a little bit about the public-facing operators and how they did in broadband, mobile, and video. And while we did see some improvements in broadband among the operators and even a surprising video subscriber gain from Charter, it's still pretty clear that the cable guys aren't really out of the woods yet as they continue the fight against fiber and some still pretty strong fixed wireless access competition. But then again, it's not all about technology, of course. Cable's been adjusting its pricing and packaging and trying to improve its operations and customer care capabilities, and doing a lot of that on the digital side of the business. But as Vikash points out, it's going to be an uphill climb, as changing customer attitudes and perception can't be changed overnight. So with that as our backdrop, let's get to it. Well, hello, Vikash. It's good to have you on the podcast. I keep tabs on your insightful industry coverage with New Street Research, and you and I exchange questions now and then. But great to have you as our guest today as we discuss some of the takeaways of the recent round of earnings results for the cable guys. But before we dig into all that, can you just help everybody get their bearings here and just tell us a little bit about your role at New Street?
Yeah, thanks. Thanks so much for having me, Jeff. So I'm Vikash Harlalka. I am a director at New Street Research. We are a boutique independent research shop focused mostly on the cable and telecom side. And my role specifically is I'm the lead analyst on the cable names, so like Comcast, Charter, and Optimum. I have mostly focused on the broadband side of things, looking at fiber and cable. And then I also help my colleague Dave Barton and cover the wireless stocks. So that's kind of my focus.
Okay. Well, good. Well, today we're going to talk a lot about cable specifically, right? And, with Cable One just reporting just about a day ago, I think from where we're talking today, the cable industry's fourth quarter results are pretty much in the books. And, we've both been following along, and I think when you kind of look at the results as they came in, we did see some areas of improvement, though most of the cable guys are still losing broadband subscribers, Charter notwithstanding in the fourth quarter. But, as you kind of try to put it all together and kind of see how it fits all together, what was your general reaction to the direction that the cable guys are going? It seems on one hand, maybe there's some cause for optimism, but it's also clear that the industry is not out of the woods yet, particularly on the broadband side.
Yeah, so I would say there are a few things that are worth noting about the fourth quarter results. So when you look at the aggregate broadband industry, so the industry growth has improved substantially when you compare it with last year's fourth quarter results. And the part of the reason is because last year's fourth quarter results were heavily impacted by ACP-related losses. And when you look at the last 12-month results, you'll see that industry net adds have actually improved substantially over time and are on an upward trajectory. So that's one thing. The second thing to sort of think about when you look at the fourth quarter results is cable net adds actually improved year over year, but that was mainly because they didn't have any ACP-related losses this year compared to last year. And the third thing that I would point out is that fixed wireless net adds, they continue to remain strong. So these were the three things that I would point to on the results from the fourth quarter. Now, when we talk about cable sort of trying to get out of the woods, there are two things that need to happen. One is industry growth. It needs to keep improving. And to just give some context to the listeners out here, industry growth used to be 2.6 million net adds a year. This was all pre-pandemic, and then the pandemic happened. Net adds shot up a lot. Wireless only households decreased, and then over the last 2 3 years, what we've seen is industry growth has sort of gone down substantially. It even went down to almost like a 1 to 1.2 million level, mainly because of ACP. And now it's somewhere around the 1.8 to 1.9 billion range. So we want that industry growth to go back to that pre-pandemic level of 2.5 to 2.6 million annually. So that's one thing. And then the second thing that needs to happen for cable to improve is fixed wireless net adds need to slow down dramatically. And you kind of want both of those things to happen. One happening without the other is probably not going to help cable as much as we need. The good thing is we're probably moving in that direction.
Okay. Yeah. And we'll have to see where this goes. But, just like as an observation, I was listening to, Jim Holanda, the new Cable One CEO. And, he was kind of saying, well, he is only 10 days into the job, but as he's coming onto the earnings call. But, he was kind of wondering or thinking that we're kind of entering this stage of like equilibrium, in home broadband, so that's going to make it maybe a little more difficult down the line, when you're kind of competing on that connection by connection basis. But as far as like what cable operators are trying to do, we are seeing them try to combat or remedy some of this with new pricing and packages, price locks, free mobile lines they're throwing in, and Comcast is right in the middle of that. And they've been preaching patience on some of the earnings calls. But how much patience is Wall Street going to give them, right? For cable to kind of get back to, maybe not subscriber growth yet on broadband, but maybe on the path that way. And maybe they are to a degree, but, some of the cable stocks responded pretty well, after these earnings. But so I guess back to the original question, how much patience do you think Wall Street has? Is the clock kind of ticking right now on the patience side?
I think most people listening to this know that Wall Street doesn't have patience. That's a fact. So
no matter what, yeah, no
yeah,
patience at all.
I mean, it's always sell first, and then we'll think about it later. So
Maybe done
look,
for me lately. Yeah.
the large cable operators, I think they're all implementing the right strategies. So what does that mean? It means fixing your pricing strategy, fixing customer service. These are the two most important issues out there. But it takes a really long time for anyone to change this. And then it doesn't trickle down to a change in brand perception. The brand perception, customer perception, whatever you call it, it takes a really long time. And cable industry has taken the customers for granted for many, many years. And those customers don't forget so easily. As soon as they get a chance to move on to an alternative service, they just do it right away. And that's what's been happening for the past 2 3 years. The customers found alternatives in terms of fiber products or fixed wireless. And as soon as they got that, they were like, you know what? We're out of here. We don't need you anymore. So when you think about Wall Street, what does Wall Street want? They want results, right? We've seen Charter trying to improve their customer care for a long time, right? We've heard Tom Rutledge in the past and like Chris Winfrey talk about bringing their customers care function onshore so that they can improve the quality of customer care. It's all commendable, right? But we haven't seen a meaningful impact on customer metrics. And until that happens, we're not going to see any improvement in their stock price and valuation. I mean, we might see like small upticks like what we saw recently, but it's not going to be dramatically different than what we're seeing right now.
Yeah, and one thing you do keep tabs on is like how the NPS scores are tracking, among the operators. And, I know you sent along some stuff recently, and we'll talk about Charter and some of the new hires there. But when you kind of look at that, where is cable in general, compared to some of the broadband providers? I know there's a big difference, but what's your general thought on that? Yeah.
So before we get into that, I want to give a shout out to Recon Analytics, which is run by Roger Entner. He's been a fantastic partner to us at New Street. We use his data, and he calls it CNPS. It's component NPS. It's pretty much the same thing as NPS, but it's a branding thing. It's a branding thing, and so we'll use the term CNPS over here. Um, but look, when we look at the data, the cable CNPS has improved over the last 3 years. That's the amount of data that I have looked at. It used to be substantially negative, like in the high single digit negatives or like even lower double digit negatives. And now it's got to the point where it's either zero or like slightly positive. But if you look at the overall trend, it's kind of flatlined. The CNPS hasn't changed over the last year or so, as far as we can see. And when you compare it with the rest of the industry, right? You compare it with the fiber guys, you compare it with the fixed wireless guys, you compare it with the satellite guys, they're all miles ahead of where cable is. I mean, they're all in the 20s and 30s. I mean, there was a time when some of them were like in the 40s. I think it was fixed wireless was in the 40s at some point. Even satellite is like miles ahead of cable. And it goes
Satellite
to the
broadcast.
point,
Yeah. So satellite
yeah,
broadcast. Yeah. Okay.
satellite broadband, yes. And it goes to
Interesting.
the
Yeah.
point that I made earlier, that it takes a long time for customer perception, brand perception to change, which is why I think the cable CNPS is where it is. If you look at the different components of CNPS, cable struggles in two areas. One is your price per value equation, and the second is customer care and support. And they're both fixable issues. There's no reason why cable can't fix it. But like I've said earlier on this podcast, it takes a long time for like operators to fix that.
Yeah. Now, what do you maybe cable needs like to develop some flanker brands? you know, I mean that's. I remember when Comcast went with Xfinity as a brand, and Cable One was Sparklight, and Charter with uh, Spectrum.
Spectrum.
Cablevision went with Optimum, and now Altice USA is now Optimum. I mean, those are brands, but yeah, it's like what about like a flanker brand? but
Well,
somebody
I
will
mean,
figure it out though. It's like well, actually, this is just Comcast.
yeah, I mean, like, look, there are things that they can do. I mean, I'll just mention one thing. If we look at the example of like Shaw in Canada, they started branding their broadband product as Fiber Plus. And there was some
Hmm.
lawsuit with some incumbent over there. I can't remember with whom it was, and um, they managed to defeat the
Tell
lawsuit,
us.
and they could brand it as Fiber Plus. Why can't the cable guys here do that?
Yeah. Yeah. Well, maybe they'll start to. Well, I think Charter for one. I think we were talking about their new radio over coax thing they were doing. Then they changed it to fiber powered DAS. So they're trying to insert fiber into it. And you know, well, maybe we'll talk. Just kind of drill down on perception and CMPS. With a charter, right? Because just a few days ago, we saw a pretty interesting hire with the appointment of former CEO Nick Jeffrey. He's going to join them in September as COO. So a few months down the road. And when that was announced, I mean, you put out a note saying, "Hey, this is a pretty smart move," and I agree. But talk a little bit about why you think that is. I mean, do you think he can kind of bring some of what he did at Frontier, which was like down in the dumps, when he took over, to the point where they almost thought about like rebranding that company, and then they ended up keeping Frontier because things are going positive. But yeah, we don't know his whole playbook, but yeah, why do you think that makes sense for them to bring Nick?
So So, I mean, you've covered a lot of it right now. So look, I think I definitely agree that it's a fantastic move by Charter. So if you think about the C-suite at Charter, they have Chris Winfrey, who's the CEO, and then they have got Jessica Fisher, who's the CFO. They used to have a COO, but I think that seat's been vacant for the past few years. So they didn't really have a COO position. And there's only so much that a CEO can devote his time to, right? So they definitely should have filled this seat earlier, but it's whenever you get there, right? And so coming back to Nick Jeffrey, look, he's got a history of turning things around. He's turned around large broadband and mobile businesses. I mean, he's turned around Vodafone UK and Frontier out here. These are prime examples of his work, right? The result of his maniacal focus on improving customer care at Frontier is out there for like everyone to see. Under his tenure, Frontier's fiber net adds, they increased tenfold. Total broadband net adds, they went from like a negative 75, 80,000 a year to like a positive, like a plus 250,000. EBITDA growth, which was declining sort of mid teens, like double digits, it went the other way around and EBITDA was growing. They posted like a double digit EBITDA growth in like 3Q. So he turned around like all the important things that matter. And of course, like he ended up getting Verizon to buy Frontier, right? So he made money for his shareholders. Um, Jordan's biggest issues right now are customer care and pricing. Um, I can't think of anyone better than Nick to come in and fix both because he did that at Frontier. Um, Hopefully, once these issues are fixed, it'll trickle down to brand perception as well. But like I said, that takes a while. But as soon as investors start to see any incremental improvements in the customer metrics, it's going to start having a dramatic impact on Charter's operating metrics and stock price. Investors just want like those little green shoots for them to start developing confidence that, okay, this is a good hire. It's going to start. It's working for the metrics, and it's going to sort of show us the results that we need.
Yeah, and I wonder if he's going to have to take a little more of a agnostic angle, into what he does at Charter, because at Frontier, it was, you hang your, well, you mentioned customer service and experience and everything, but they also hung their hat on fiber, right? And Charter, yes, they are doing some fiber, but they're upgrading all the HFC plants, so they're gonna have to figure out a way, I think, to kind of be agnostic in the messaging, on kind of what makes them special. So I'll be interested to see how they do that under
Yeah,
when Nick comes on
yeah.
board. Yeah.
Look. I mean, obviously, like he had the advantage of having fiber at Frontier. But if you sort of think about it, when he joined Frontier, fiber was only like 20% of the footprint. And then as they just exited, fiber is like close to 70% of the footprint, right? And so it's not like he had fiber in most of the footprint when he started, right? Like it took him time to sort of like build
Mm.
fiber and sell fiber. And then I think the most amount of work that he did was on just focusing on the customer care and making sure that the pricing makes sense. Um, and I think he could do the same thing at Charter. Obviously, like technology is technology. The plant is the plant. You can't really do much. I don't expect Nick to go there and say to Chris Winfrey and be like, I want you to fiberize the entire footprint. I can't work without that. It's not happening. I don't think they'll do
Right.
that.
Well, that would
So
cost
he's
be an incredible amount of money. Yes, that's not going
yeah,
to happen. I think we can agree. Yeah. Yeah,
yeah.
for sure. Yeah.
So he's just gonna deal with whatever he has. If he can just focus on the pain points, then I think we have a winning combination.
So I did want to talk a little bit about mobile and the cable operators' position there. Right. We've seen some success there, particularly among the larger ones like Comcast and Charter. But do you think cable in general gets enough credit for that part of the business? Or is maybe the jury out a little bit, because, particularly the larger ones, they tend to do these promotions with like 1 year of free mobile line, and then a year rolls around and they have to try to transition all of them to pay. But we've also got a lot of small and mid-sized operators getting in there as well. So when you kind of put it all together, is there enough credit being given there, or there's some reasons to kind of think about mobile in terms of it being a big part of their overall business?
Yeah, so look, I think it's a bit too early for investors to give credit to the cable companies for the wireless business. So we've been talking about Charter for a while. So let's just stick to Charter for a second, and also because they are the furthest along the convergence curve compared to all the other cable operators. So a little over 20% of their customers are converged customers, which means they take both broadband and mobile, which represents about 10% penetration of passings. It's not nothing, but it's not a whole lot, right? When you look at the share of revenue that comes from wireless services, that's about 7% of Charter's total revenues. Again, not a huge number. Wireless EBITDA is probably negligible at this point because they actually recently turned positive on wireless EBITDA. So it's contributing close to nothing at this point. It's too small for it to matter to investors right now. So when the cable companies talk about wireless, they always talk about wireless as a way to reduce churn and improve customer lifetime value. And they have seen some success on that front. But wireless needs to have a larger impact on EBITDA for investors to actually care about. When we think about like the smaller cable companies, right? They've also been trying to come out with their own wireless products with MVNOs. So, as an example, I mean, Cable One just talked about trying to roll out their wireless product in their entire footprint. Mediacom has already come out with their own wireless product. Astound has done that. Most of these cable operators, they have access to an MVNO through the NCTC agreement with AT&T and Reach. But selling wireless is a very different proposition when it compares to selling broadband. With broadband, you can just have an online presence on your website, or you can have like a door-to-door salesman who goes around, knocks on people's doors, and you can sell broadband. With wireless, you have that need to have a physical store where a customer can walk in, look at the phones, they can look at your pricing plans and decide whether they want to go with you or not. And then over time, you get to a point where you have to start offering subsidies on handsets to lure customers to come and become your customers, right? And these are both very expensive propositions. It takes a while for you to break even until you reach meaningful scale. I think these small operators should probably do like an NPV analysis to estimate like what it would look like if they didn't have wireless, and then what it would look like if they had a wireless product. When you do that analysis, you can pretty much come to the conclusion whether you need a wireless product or not. I'm not sure that every small operator is going to make money with wireless.
Yeah, and we don't have a lot of results to really look at yet. I mean, even like a company like Wide Open West, which is kind of in that mid range, they've had a product out in the market for a few years, but they still have not reported any line results, and we will probably never see that because now they're private. So yeah, the chances that we'll have to see where Cable One goes. But yeah, I think even the new CEO is like, hey, this is going to take some time to get a result. So okay. And then,
Yeah, I mean, you can look at Comcast and Charter.
mhm,
I mean, I think it took like 7 years or something for Charter to actually break even on
yeah.
wireless. So it takes a long time.
Yeah, yeah, you got to be pretty committed to get that done, and not everybody has a scale, that a charter has. So, but yeah, and I think on the NCTC side, I think we'll have to see how this goes this year. Hopefully I'm going to be at the ACA Connects Summit next week. Maybe get a little bit of an update from the NCTC folks on kind of how adoption is going and interest, among their members. But uh, good stuff. And then, I was wondering if we kind of roll everything together, from Q4. From your side of it, was there any big surprise that came out of it? I think from my end, the fact that Charter pulled out a video subscriber gain was kind of surprised everybody. Even though Charter kind of said that, well, don't really expect this to be a regular quarterly occurrence at the moment, but going positive at all was kind of a surprise to me.
Yeah, I would say that's probably the biggest surprise of all. Adding video subs, that was not on anyone's bingo cards, probably not even on Chris Winfrey's bingo card. But here we are. They added positive subscribers, and obviously, like you mentioned, I don't think anyone expects them to keep adding subscribers. Even the company doesn't expect that. I mean, it's possible they do it again, but it's not something that I would bake into my business model. The only other thing that I would want to point out is just the strength in fixed wireless at both Verizon and T-Mobile. It just continues to surprise investors. I mean, I remember having conversations with investors like 2-3 years ago, and I myself had this opinion 2-3 years ago that, oh, now we're going to start to see fixed wireless slow down. And it just continues to surprise us. Fixed wireless has remained like stronger than anyone would have expected. We do expect that fixed wireless sort of starts to taper off a little bit, and it's important for the cable investors. But as of now, it hasn't shown any signs of slowing down.
Yeah, and even from AT&T, right? They're getting more aggressive with the using it in a kind of a different approach, in the copper footprint, or where they're going to eventually build fiber. So yeah, they've been helping to move, kind of keep that trajectory going as well. Yeah. So, all right. And it's funny that we talk about Q4 and we're already late February. So, we're nearing the end of Q1 already. And, based on the commentary we got during the Q4 results and earnings calls, what are your thoughts or expectations for Q1, right? Any big trends that come out of there? Do you expect to see more gradual improvement from the cable guys, or is there something about Q1, that kind of gives you pause?
So I probably sound like a broken record, but I mean, the most important thing is obviously fixed wireless net adds. My expectation is that fixed wireless net adds slows a little bit, and it should start to slow from here. It's one of the most important determinants for how long it takes for cable to get back to positive subscriber growth, which may not happen until the end of this decade, maybe even after that. On the cable side, I don't expect too many changes. I mean, the changes would be so minuscule that it's like, I mean, you could sort of chart it to any reason. I mean, they could have like a slightly stronger gross add quarter, or maybe like a slightly lower churn quarter, or maybe higher churn quarter. And so I wouldn't look at like the change in any cable net adds trajectory in 1Q and make a definitive comment about it.
Yeah. So definitely, like, if anything happens, it's going to be incremental, small in the quarter. Okay. Well, good. Well, that's where we're going to leave it today, Vikash. So thanks again for jumping on the podcast with me today. It was good to catch up and get your insights. But before we wrap up here, just a quick shout out to Pierre Landrau for editing this episode. And to be sure to subscribe to the Light Reading Podcast for future episodes of the Signal Strength Podcast and others from the Light Reading team. So again, thanks for catching this episode, and we'll see you next time. Thanks again.
Thanks for having me, Jeff.